Hi everyone, this is a technical analysis on the USDCAD. Let's start with some fundamental background first. Following the big USD depreciation after the news in the US CPI report, we saw the greenback coming back across the board as the US data kept on surprising to the upside. In fact, the US retail sales control group beat expectations by a big margin, and the US initial claims fell to record lows. Moreover, the US PMIs yesterday showed a mixed picture, with services PMI missing expectations, but the manufacturing PMI jumping from 46.2 to 49.0. As long as we keep on seeing good data for the US and the labor market remains strong, we are likely to see more rate hikes from the Fed. On the other hand, the BOC hiked rates by 25 bps as expected at the last meeting, as the central bank doesn't like the persistently high underlying inflation with a tight labor market. In fact, the Bank of Canada Governor Macklin said that the Bank of Canada is prepared to raise rates further, as if they don't do enough now, they will likely have to do even more later. The recent Canadian underlying inflation data beat expectations on all measures, but the Canadian retail sales missed across the board. Overall, it's a mixed picture for the BOC, and it puts them in a tough position. On the daily chart, we can see that the price got stuck in a range between the 131 handle and the 132.25 resistance. The recent rejection from the 132.25 level and the red 21 moving average suggests that we may see another test of the 131 support. If the USD CAD breaks below the 131 handle, we should see more sellers piling in and extend the drop into the 130 handle. The buyers, on the other hand, will need the price to break above the 132.25 resistance with conviction to start targeting the 134 handle. On the 4-hour chart, we can see that if we draw a trend line connecting the lows, we might have an ascending triangle pattern forming. The price can break on either side of such patterns, but after a breakout, we can generally see a big extension in the direction of the breakout. So these levels will be key to watch. On the 1-hour chart, we can see that we have a short-term downtrend, defined by this downward trend line and the moving averages crossed to the downside. This is where we should get interesting. In fact, if the price breaks above the downward trend line, the buyers are likely to pile in to target the 132.25 resistance first, and upon a breakout, the 134 handle. The sellers, on the other hand, we want to see the price breaking below this upward trend line to pile in and target the 130 handle. The highlight for today will be the US Consumer Confidence Report. Previously, the report beat expectations by a big margin, which, coupled with a miss in the US CPI report a couple of days before, gave the market soft landing vibes. At this point, though, it looks like strong data is going to give the Fed a hard time and probably force them to do more. Tomorrow, the Fed is expected to hike by 25 bps, and the market's attention will be centered on possible hints about a pause or further rate hikes. On Thursday, it will be the time for another US jobless claims report, where strong data should support the US dollar and weak readings should weaken it. Finally, to conclude the week, we will see the latest US PCE and employment cost index reports, with the market likely to pay more attention to the wages data given the strength in the labor market.